I will make one comment here. It's political, but it's not meant to be. This is the result of socialism. In front of you, you see a chart. Kind of looks like the stock market, doesn't it, everybody? But these are the 30-year Treasury bonds traded at the Chicago Board of Trade. And we are in a secular bear market, which means interest rates are going up as the prices are going down. Back around COVID, as we see 2020, the interest rates went to all-time kind of lows and they spiked lower. Generally, when you see movement like this is the beginning or maybe the capitulation of a trade. This market, everybody, is what I grew up in the 1980s. This market was priced for a US Treasury bond future was priced at $56. Today, at the peak of when COVID came out, it was $187. Actually, it traded over $190 at that time, which means interest rates went from a price of 56 to 192. And I won't get into the coupon changes along the way, but basically, we have entered a secular bear market on a 40-year bull market that has ended in the bond market at the beginning of COVID. COVID marked literally the low in interest rates. And by the way, why shouldn't it? Given the amount of money that the worldwide governments pumped into the system. If we look at this, we have seen interest rates go from a low, this price represented about a 2% interest rate on a 30-year bond. And today we are now looking at approximately a 4% interest rate on a 30-year bond. So interest rates on US Treasuries have doubled. And we can kind of see that in the mortgage market as mortgages went from just under 3 to now over 6. This is the reason why, everybody, a main reason why the stock market is going down. But let me show you the other reason that people are losing sight of, and this is the more important one. This is a picture of the US dollar. The US dollar is in a huge secular bull market. It's a great time, everybody, to travel overseas. Our dollar is buying more hotel time, more Uber time, more food, more everything overseas. Our dollar is the strongest it's been in history. And no matter what currency we look at, this is the case. Let's look at the euro. In 1998, the euro was formed. It was priced higher then than it is now. The euro is making all-time new lows. That's why the dollar is making all-time new highs. The euro now is at 97 cents. It's basically, for most of my life and most of your lifetimes over the last 24 years, the euro generally priced itself around 130 with a high of around 146. Now we're at the prices that we have never seen, even when this literally began as a new currency. Let's look at the British pound. See this over here, everybody? The only time I ever saw the British, this is, by the way, all-time lows for the British pound. It literally traded at about 103. It bounced to 108. But this is a time when obviously the British pound is under deep threat. It's under threat for a lot of reasons. But the biggest reason is the Bank of England so far is, even though they've raised rates once, they are now buying bonds again because they're frightened of the value of their own, of their currency in outside markets. So aside from a new prime minister, this is a currency that we need to stay away from for a while. but I suspect that we may either be close to the lows in this currency, but it's very possible that this could go to parity with the dollar and with the euro. That means right now, the dollar is the safe haven. And it is because we are the only country that is aggressively moving rates up to combat inflation. I will make one comment here. It's political, but it's not meant to be. At the end of the day, all the countries I'm mentioning, whether it's Great Britain or the European Economic Community, the EEC, but I can even go into the Japanese yen, which we've talked about before. This is the result of socialism, folks. It is clearly showing that countries that put so much debt out there to help finance its populations, the value of their currencies becomes meaningless. And then possibly is leading them to a situation where they are going to have to devalue their currency. So we have a worldwide economic problem, and we are in the middle of it, not the end of it. We may sadly be only in the beginning stages of it. There is no wonder why the US stock market is selling off. The reason, so let's look at finally the thing that we care about and why this matters to Flip and to the way we run our AI and our product on our platform. As you can see, the stock market peaked literally at the end of 2021. Ever since 2021, the stock market, through various legs, has made new lows. It recently has bounced off kind of its old low, but why has that happened? Today was the bounce. If we zoom in, look at this bounce. It looks very impressive to everybody, doesn't it? Why? Here's why. Very obvious. The US dollar came off of all-time highs, but it made a new high nonetheless. This is a dead cat bounce in the stock market. The reason it was bought, the stock market was bought today, is because the other things bounced and they took off their highs. These markets are in huge bull moves where the dollar is becoming stronger and stronger. Interest rates are going lower and lower, but that doesn't mean they go up in a straight line or down in a straight line. They move around just like the stock market. Stock market had its cues today from seeing a retracement in the dollar and a retracement in interest rates. But I can tell you one thing, everybody, all of my experience tells me that our AI is correct. Why? Interest rates just don't go down for a little bit. They go down for years. Years. They went up in price and down in rates for 40 years. I only see 2 years of movement in this bond. I fully suspect this, as I predicted earlier in the year, this product will go to 100. It's at 127. That right now, I predicted that around 160 area, and now it has lost 30 points. So these markets are still going lower, which means the US stock market is also going to go lower. Any bounce is to be sold.